Hello, everyone. I hope you're having a great day. Welcome back to the world's best investing podcast. After all the turmoil over the past few weeks, I wanted to make a video explaining the fundamentals behind how to make a 25x investment. I could make one for a 60x, which is roughly how much I'm up on AMD today, but I think the Palantir case is pretty relevant. So I went long Palantir at $7. I bought very heavily in between 7 and 8, and now the investment is up roughly 25x. With all the turmoil regarding whether we are actually in a bubble, whether we are moving into a bear market, whether we actually are in a bear market, as I believe, I think this is a very relevant conversation. Today, I'm going to share how I think about these investments and generally what the properties are. I can tell you before we get into the technicals, the number one aspect is that when you pick something that then is fairly likely to go on to be a multi-bagger, everyone thinks it's a radically stupid idea. Because in essence, a multi-bagger of the sort, a 25x or a 60x investment, comes down to two things. One, investing in an extraordinary company. Two, when everyone believes it's actually a very bad company. So let's dig deep into the details now. So as you know, I have a conviction that over the long term, stock prices track free cash flow per share. So here you can see Spotify's free cash flow per share. You can see how since 2016 to 2022, it was basically flat. So I bet the farm here in 2022 at $97.50. Why did I do that? Because I had a deep understanding of the company's value creation process. And ultimately, that led me to believe with a high degree of conviction that free cash flow per share was going to rise quite quickly. Why? Because these guys were just growing their mouse, monthly active users at record pace, as investors were getting incrementally depressed with this company. And so I figured that because they were so good at increasing MAUs, they actually had a great ability to optimize the user experience, and that as they were then set to deploy additional audio verticals like podcasts and audiobooks and everything, the average revenue per user was going to increase exponentially and suddenly, and that was going to translate into a rapid increase in free cash flow per share because it would enable them to make more money, keeping their costs flat. And so you can see how spectacular this has been. Spotify is up around 6x since then. And as I've said many times, I believe this is just the beginning. Now, what's interesting is you have to understand this has happened amidst tremendous inflation, wars, lots of geopolitic uncertainty, now people crying whether this is a bubble or not. Actually, the market doesn't care about any of those narratives in the long term. The stock price is simply going to track free cash flow per share. Let me demonstrate. Let me show you what the stock price has done. See, you can see how it's gone up exponentially since 2022. And that's basically because free cash flow per share has gone up from 0.1 to 13.9. Now, at any point in time, what I try to have is very clear visibility on the drivers that push free cash flow per share up or down. That's how I keep my convictions. And you can see that it's been a tremendous investment. It's now been consolidating up here, although I don't really pay any attention whatsoever to technicals. I remember vaguely that back here in 2022, a lot of people were sharing ideas about technicals, saying how effectively it was going to zero. But of course, what they didn't understand was the business itself. And what's interesting is that you couldn't have possibly figured this out with a discounted cash flow model. I'm a value investor myself, right? So the basis of my education as an investor is Warren Buffett, it's Benjamin Graham, but it's also Phil Fisher. And Phil Fisher taught me that actually you can have uncommon profits with common stocks because companies keep on creating more value, solving a growing volume of acute customer pains in a way that's increasingly harder to replicate. The businesses that do that tend to go up in market value because the market value of a company is really just a direct function of the aggregate volume of problems that it solves for its customers. So you can see how the market hasn't cared about inflation, geopolitics, absolutely nothing. It's just been tracking free cash flow per share. So that's case number one. Let me just go back to the idea of free cash flow per share. You can see how it's rising very quickly now. What do I think is going to happen now? I think it's actually going to continue rising even quicker. So one thing that has happened over the past few years is that purchasing power has gone down quite a bit with inflation. Yet this company has just continued increasing prices. Churn has remained quite minimal and free cash flow per share has gone up. Actually, the fundamental driver of this company's free cash flow per share is the pace of iteration. because this company is just an A/B testing machine, as is the case with many other Web 2.0 platforms. And so the pace at which they iterate correlates, actually drives the pace at which they drive incremental value for customers. And therefore, that is also the primary driver of how much additional business they can do. Why do I think it's going to accelerate now? Because now these guys are leveraging AI for generative coding. And so now they have an agentic layer on top of their traditional backend, which enables them to quote unquote speak features into existence. So the speed at which they're going to be able to iterate, A/B test, and deliver more value, incremental value to customers, and solve an incremental volume of acute customer pains in a way that's increasingly harder to replicate is going to rise exponentially. So this increase we've seen from 2022 to the last 12 months has been done in what I call medieval mode. So it's people really just coding manually. Now this is changing thanks to AI. It doesn't matter whether we are in a bubble or what. This company is trading at, I think it's 5 or 6 times sales. So still a very reasonable multiple. And so it doesn't matter what people are crying about in the short term. I can pseudo guarantee, so I have a conviction, and this is obviously not financial advice, that in 2 to 3, 4, 5 years' time, we're going to look back and we're going to see this curve trending up beautifully and the stock price going up beautifully. And that's because I have a qualitative understanding of the company. We have the 2 new co-CEOs stepping up next quarter. I spoke to Daniel, and he said one thing. He said, Gustav and Alex are the real deal. And that's what I needed to hear. I read the earnings call transcript for the last earnings call, and I can see that Spotify's qualitative properties are imbued in the DNA of these 2 gentlemen. So my conviction remains very strong, and I do not care whatsoever what people are saying. So to give you some context, that investment decision in 2022 was highly criticized. And now people can't believe it, right? So there's a lot of people asking for proof. What we have today similarly is Duolingo's pick. Duolingo in essence is exactly the same thesis, except that Duolingo is an order of magnitude smaller than Spotify. It's a tiny company, but the organizational properties are just as good. The thesis is the same. They have this platform and they're deploying additional verticals, educational verticals like chess, math, and music. And now with AI, Duolingo's value creation process is going to accelerate dramatically. And recently we had a discount that I took an opportunity off. And you can see how people are pro-cyclical. So the fundamentals are just as good as Spotify's back in the day. Actually, I would say even better, because free cash flow per share is already growing very fast in Duolingo's case. But if the stock price goes down, people turn very bearish. And then the thesis gets heavily criticized, which is how you know it's a moment to bet the farm on the company. It's a moment to double down because the fundamentals are great, but investor sentiment is considerably destroyed. Now, let me give you another example. Obviously, Spotify is up 6x. That's not a 25x investment. So now let's look at a 25x investment, which I actually did, which is Palantir. Let me share the screen now for you. Here you have Palantir's free cash flow per share. You can see how it wasn't even at minimum levels in 2022. It just dipped a little bit. The government business was slowing down, and that was taking a toll on the financials. And so people got very bearish here. So everyone here thought that Palantir was just a consulting company. I, and actually a good number of smart individuals on X as well, decided to take the contrarian stance that this was actually not a consulting company. This was a platform in the making. Then they introduced AIP, which is the artificial intelligence platform, which sort of unlocked their ability to distribute their digital twin platform. And then with the onset of LLMs, which largely enabled the deployment of AIP, free cash flow per share has been trending upwards. What's actually happening here is that as AI capabilities double every 2 months, Palantir's time to value, so the time it takes between a customer hiring the service and receiving value, is shrinking proportionately in the same period of time. And then the actual value that the platform delivers is increasing just as much as AI capabilities double. So every 6 months, roughly, Palantir's time to value goes down in half, and the actual value delivered by the platform to customers goes up 2x, and that's a marginal cost. Because Palantir is actually a singularity scaler. That means that actually all they have to do in relative terms is keep on compounding their platform and maintain an absolute advantage in the marketplace, which affords them data which no one else has access to. And then if they just plug that data into the latest frontier model, they basically outpace everyone else. So this is on an exponential curve. Like Duolingo and Spotify, this is actually a singularity scalar, meaning as basically its earning power goes up in tandem with the evolution of AI scaling laws and at a marginal cost. Here you could argue that actually the price of the stock is quite high, but that is not a problem of someone who bought down at the $7 to $8 range. And it's debatable, right? It's debatable what's the fair price now. But here's my position, and here's how you truly capitalize on multi-bagger opportunities. Even if the stock price today falls 50%, like it did in April, or 70 or 80%, I'm still holding because I have very clear visibility on the value creation process. I understand perfectly what drives Palantir's free cash flow per share up over the long term, and that is basically productization. Do they continue to productize? Yes. They recently released AI FDEs, which is an AI model that mimics the activity of forward deployed engineers. And so they just continue automating and productizing their platform. And then, as I've explained many times, it's getting fractally verticalized, meaning there's an endless number of verticals emerging from the platform. So now Palantir's digital twin operating system is specialized for manufacturing, specialized for defense, specialized for various functions within government. And so as that continues, I think that the value creation process just continues to accelerate as AI scaling laws persist. And we actually have two things going on. One, these AI scaling laws are accelerating. Two, we have new ones emerging with a relatively steady frequency. I don't know if we are on the path to super artificial intelligence, so generalized intelligence, but it's definitely good enough to create value in businesses and automate a large degree of the operations. So I don't think this conversation about Jan LeCun and stuff, I'm sure this AI is not going to be perfect, just like compute over the past 2 decades hasn't been. But I do believe that it's enough to automate a lot of stuff. And you can see it in the results of Palantir customers. So Palantir customers call this magic, and it's because it is a form of magic in a way. And I think that this magic is just going to continue going up, right? So again, what's interesting is that back in 2022, everyone thought this was a stupid idea here. Turns out it wasn't. Turns out the fundamentals were great. And then along the way, what you do have is people calling for overvaluation. So overvaluation is an interesting concept, but for me, when you buy something that you know is an extraordinary company, let me just get rid of the screen now. When you buy something that you understand is an extraordinary company and they continue to execute over time, these companies have a tendency to just outpace the valuation. So as many of you know, I've been an AMD shareholder for a long time. Over the past year, everyone was very, very pessimistic on this thing. I was not. Why? Because I have a very clear view of their value creation process. And so I'm not pro-cyclical. If people get depressed, that doesn't automatically mean I get depressed. I just continue focused on the fundamentals and I think long term. And so what is the essence of the philosophy here? The essence of the philosophy is betting on extraordinary companies long term, led by founder operators. And so long as the qualitative properties of the company remain intact, as in so long as these companies remain focused on solving problems for end customers, they remain focused on long-term value creation versus short-term profits, have a willingness to self-disrupt and thus stay up to date with value creation processes in the market, enabled by contemporaneous technology, so new technologies as they emerge. So long as that happens, the tendency is for free cash flow per share to continue going up over the long term. With AMD, you could see everyone giving up in this company over the past year, and I didn't, because it's the same philosophy. To be a multi-bagger investor, you have to be thinking very long-term and you have to be focused on value creation processes. Now, going forward, with HIMS and Duolingo, my two new bets, it's exactly the same playbook. I use the algorithms, so the mental frameworks that I explained in my free masterclass, which I linked to on X yesterday. I'm not going to link it today because I'm running some tests there, but so far, prospective customers like it a lot. So a lot of people are actually telling me, hey, I think your course is worth $0. And instead of getting defensive, I figured, okay, let me make a $0 offering for you that also delights you. And so you can see that my focus as well in my business is on delivering better custom outcomes per dollar spent, even when they spend $0 with me. Because actually, when you guys watch my content, you are spending time. And that is a form of capital too, which I'm deeply grateful for. Anyways, guys, I hope that you understood the philosophy that I explained today. I think that it's a great time to discuss this because as people keep talking about a bubble or not, I think that the recipe of betting on companies which are extraordinary, which you have clear visibility on the drivers of their free cash flow per share, and you believe free cash flow per share is going to go up way beyond expectations and do so at a reasonable multiple too. You don't have to chase hard stocks. And by the way, the definition of a reasonable multiple is very volatile nowadays. With Palantir, I think this is basically N of one company. So even whatever the price to earnings ratio is today, I think that this company is just going to continue outpacing expectations for the very long term. So I once very infamously said that this company had 100x potential since $100 per share. It seemed like an idiotic take, and so far it's actually been the most directionally accurate call in the market. No one really believed that, and it's because it's not common for investors to have such a laser focus on fundamentals. If AI scaling laws break, I shall go back on that call and perhaps admit a mistake if it does turn out to be. But so far, my understanding of value creation processes lead me to believe that that call is going to continue being very directionally correct. And then the odds of us seeing that materialize. So eventually Palantir being 100 times bigger than at $100 per share, I believe the odds are meaningful. Then also a lot of people say, well, you keep saying these things just to sell your course. And I think it's pretty obvious that I sell my course when my judgment turns out to be correct, because people only want to learn my mental framework when they see that my judgment works. And so I could not make those calls and actually operate at a lower risk level because I've already had a lot of success, and people could just be like, well, he succeeded, let me take his course. But I'm not gonna trade off. I'm not gonna take a short-term win, sacrificing long-term value creation. So I do believe that actually my mental model is going to be extremely accurate for the next decade or two, and I'm going to take it to the limit. And if I believe something, I'm going to call it. And if it turns out to be wrong, I'll accept the mistake and I'll learn from that and I'll iterate the framework. But I'm not going to tame down my calls just because people today will not understand them. And I think that also says something about me, which is I'm focused on long-term value creation instead of short-term profits. I actually sell less and my audience grows less when I make comments of the sort. And that is because the majority of people are not going to understand this. The majority of people are not going to make investments like I've been making to date. And by the way, that isn't arrogant. I do understand that everyone has limitations, obviously, including myself. And this is not arrogance. What I'm saying is this is the framework. These have been the results so far. These are my calls. This is how I think it's going to go going forward. So this is an objective game. Winning is not arrogance. Arrogance, in my opinion, is not owning up to your mistakes, which I do so quite frequently. Whenever I make a mistake, which, this is a long duration game and one doesn't make mistakes every single day because I barely do anything. So I barely buy or sell. I actually don't sell, but I barely buy new companies. And you've just seen me doing this now with Duolingo. And I love the setup because the fundamentals look great. I have clear visibility into free cash flow per share, and everyone is extremely pessimistic on the company now. Everyone thinks it's idiotic. So there, I believe we have the recipe for my next 10, 20, 50 bagger, and then eventually potentially an 100 bagger. So guys, thank you very much for joining me today. Have a great one. If you enjoyed this, could you please share this with one friend whom you think will enjoy it? These deep dives and updates are for free, and so the only way this grows is with your help. So thank you very much in advance. Take care, and until next time.